It's 9 a.m. You sit down at your trading desk, ready for the day. Your plan is clear. Wait for valid setups according to your trading strategy. Take maybe 2 or 3 good trades, manage them properly, and be done by noon. You take your first trade at 9:30. It's a clean setup. Everything checks out. You enter, set your stop loss, set your profit target. The trade is running. You should step away now. Let it work. But you don't step away. You keep watching the charts. You keep looking for more. Another currency pair starts moving. It doesn't quite meet your strategy criteria, but it looks interesting. Maybe just one more trade, you think. You take it. Now you have 2 trades running. You should definitely step away now. But you're watching both trades. While watching them, you notice a third setup forming. This one also doesn't perfectly match your criteria, but you're already trading, already in the zone. Might as well take another one. By 11 a.m., you've taken 7 trades. 7. Your plan was 2 or 3. You're still looking for more. Every chart you check looks like a potential opportunity. Every price movement seems tradable. You can't stop. By 2 p.m., you've taken 12 trades in a single day. Some have closed. Some are still running. You've won some. You've lost some. But you're exhausted. Your mind is scattered. You can't remember why you took half these trades. You're not following your trading strategy anymore. You're just trading to trade. By 5 p.m., you've taken 18 trades in a single day. Your eyes hurt. Your back hurts. You're mentally drained. And when you look at your account, despite taking 18 trades, you're barely break even for the day. All that effort, all that stress, for nothing. You promise yourself, tomorrow will be different. Tomorrow you'll be disciplined. Tomorrow you'll only take the best setups. But tomorrow comes, and by noon, you've already taken 8 trades. The pattern continues. This is overtrading, and it's one of the most common and destructive patterns in trading psychology. It doesn't matter how good your strategy is. It doesn't matter how good your analysis is. If you're taking too many trades, trading too often, unable to stop trading even when you should, you're destroying your results and your mental health. Let me tell you about Yale, who took 847 trades in 3 months. That's more than 11 trades per day, before he discovered the one trick that finally stopped his overtrading completely. Yale's 847 trade disaster. Yale had been trading for about 20 months when his overtrading reached an absurd level. He knew he was taking too many trades. He could feel it. But he couldn't stop. Every day, he'd promised to take fewer trades. Every day, he'd end up taking more than planned. One evening, Yale decided to count exactly how many trades he'd taken in the last 3 months. He opened his trading platform's history. He started counting, and he couldn't believe what he saw. In 90 days, Yale had taken 847 trades. That's 9.4 trades per day on average. On his busiest day, Yale took 23 trades. 23 trades in a single day. That's almost 2 trades per hour if he traded for 12 hours.
Yale's original trading strategy was designed for 3 to 5 trades per week. Not per day. Per week. Yale was taking in one day what his strategy said to take in a week. But the number of trades wasn't even the worst part. Yale analyzed the quality of these 847 trades. He categorized them based on how well they matched his strategy criteria. 78 trades were perfect setups, met all criteria completely. 203 trades were good setups, met most criteria with minor deviations. 341 trades were questionable, met some criteria but had significant issues. 225 trades were garbage, didn't meet criteria at all, taken impulsively. More than half of Yale's trades, 566 out of 847, were questionable or garbage trades. These weren't strategic trading decisions. These were overtrading impulses. Now here's the painful part. Yale calculated the results for each category. The 78 perfect setups made him $8,900. The 203 good setups made him $6,200. Combined, his quality trades made him $15,100. The 341 questionable trades lost him $11,400. The 225 garbage trades lost him $18,700. Combined, his overtrading cost him $30,100. Yale's trading strategy was profitable, but his overtrading more than wiped out those profits. He ended the 3 months down $15,000. His overtrading had turned a $15,100 profit into a $15,000 loss. Yale stared at these numbers in disbelief. If he had just taken the 281 quality trades and skipped everything else, he would have made $15,100. But by adding 566 overtrading impulse trades, he lost $15,000 instead. The realization was crushing. Yale's problem wasn't his strategy. His problem wasn't his analysis. His problem was that he couldn't stop trading. And this overtrading was destroying everything. Yale's shocking discovery about his 847 trades pushed him to understand why overtrading happens, and what he learned about the psychology behind it explained why it's so hard to stop. Overtrading isn't about greed, though it can look like greed. It's not about being reckless, though it can look reckless. Overtrading is actually about a fundamental misunderstanding of what makes trading profitable, combined with psychological needs that trading seems to fulfill. Here's the core trading psychology behind overtrading. Your brain believes that more action equals more results. This belief is rooted in most areas of life. At a job, working more hours usually means more pay. In fitness, more workouts usually mean better results. In learning, more study time usually means better knowledge. But trading is different. In trading, more trades don't equal more profit. In fact, more trades often equal less profit because each additional trade beyond your strategy's optimal number decreases overall quality. Yale's 78 perfect setup trades proved this. Those 78 trades, less than 10% of his total trades, generated more profit than everything else combined. If Yale had only taken perfect setups and done nothing else, he'd be massively profitable. But Yale's brain couldn't accept doing nothing. Sitting and waiting felt like wasting time. Trading felt productive. His brain craved the feeling of doing something, of being active, of taking action. This need for action is deeply psychological. Humans are wired to believe that effort creates results. Sitting and waiting doesn't feel like effort. It feels like laziness. Taking trades feels like effort. Even if those trades are bad trades, they feel productive in the moment. The trading psychology of overtrading also involves stimulus addiction. Each trade provides a stimulus, a hit of excitement, anticipation, focus. When you enter a trade, your brain releases dopamine. You feel engaged, alive, focused.
When you're not in a trade, you don't get that stimulus. You feel bored, restless, uncomfortable. So you take another trade, not because it's a good setup, but because you need the stimulus. Trading becomes the drug that relieves the discomfort of not trading. Yale experienced this constantly. When he had no trades running, he felt anxious and bored. But the moment he entered a trade, even a bad trade, he felt better. The overtrading wasn't about making money, it was about feeling something. Another factor in overtrading psychology is the illusion of control. When you're actively trading, you feel like you're controlling your results. You're doing something, you're making things happen. When you're waiting, you feel passive and powerless. But in reality, trading more doesn't give you more control. It gives you less control because you're taking lower quality setups that have lower probability of success. But it feels like control, and that feeling is addictive. Yale also discovered that overtrading creates its own reinforcement loop. Take a trade. Win. Feel good. That win reinforces the belief that trading frequently works. Take another trade. Even if the second trade loses, the memory of that first win makes you want to take a third trade to get back on track. The occasional wins from overtrading, because even garbage trades sometimes win randomly, reinforce the behavior enough to keep it going despite the overall negative results. Understanding the psychology behind overtrading helped Yale see it as a trading psychology problem rather than just a discipline issue. But calculating the full cost of overtrading made him realize how destructive it really was. Cost 1. Transaction costs multiply. Every trade costs money. Spreads, commissions, slippage. If you pay $5 per trade in total costs, and you take 10 trades instead of 2, that's $50 instead of $10. Over time, these costs become massive. Yale calculated his transaction costs over 3 months. With 847 trades at an average cost of $8 per trade, he'd paid $6,776 in pure transaction costs. If he'd taken only the 281 quality trades, he'd have paid $2,248. Overtrading cost him an extra $4,528 just in fees. Cost 2. Mental exhaustion. Trading is mentally demanding. Each trade requires focus, decision-making, emotional regulation. Taking 5 trades requires a certain amount of mental energy. Taking 15 trades requires triple that energy. By the end of most trading days, Yale was completely exhausted. This exhaustion made his later trades even worse because he was making decisions with a depleted brain. Overtrading created a downward spiral of fatigue and poor decisions. Cost 3. Strategy dilution. Yale's strategy was designed for specific market conditions and setup types. It worked when applied correctly. But by taking 847 trades, most of which weren't strategic, Yale wasn't actually trading his strategy. He was trading a random mix of his strategy, plus impulse trades, plus boredom trades, plus FOMO trades. This dilution meant Yale couldn't evaluate his actual strategy's performance. He couldn't improve what he couldn't measure. Cost 4. Opportunity cost. The time Yale spent taking 566 overtrading impulse trades was time he couldn't spend on anything else. Not improving his strategy, not analyzing his quality trades, not learning, not living his life. If Yale had taken only quality trades, he'd have spent perhaps 2 hours per day trading instead of 8 to 10 hours. That's 6 to 8 hours per day he could have spent on literally anything else more valuable than taking garbage trades. Cost 5. Emotional damage. Every bad trade, every impulse trade, every overtrading mistake chipped away at Yale's confidence and self-image. After a day of overtrading, Yale would feel disgusted with himself. This emotional damage created shame, which created anxiety, which made overtrading worse. Yale would overtrade, feel terrible, promise to stop, then overtrade again tomorrow because he was anxious about yesterday's overtrading. Cost 6. Relationship with trading. Before overtrading consumed him, Yale enjoyed trading. It was challenging and engaging. But overtrading made him hate it. Trading became an obsession he couldn't control rather than a skill he was developing. This poisoned relationship meant Yale dreaded trading sessions while simultaneously being unable to stop trading. He was trapped in an activity that made him miserable. Yale's recognition of overtrading's massive cost made him try multiple solutions to stop it, but most of these solutions failed, and understanding why they failed was crucial to finding what actually worked. Failed Solution 1: Willpower and Promises. Yale's first approach was simple willpower. Today, I'll only take 3 trades, I promise myself. He'd start the day with this firm commitment. This worked until about 11 a.m. Then he'd take a 4th trade, then a 5th. Just 1 more became 6 more. Willpower couldn't overcome the psychological need driving the overtrading. Failed Solution 2: Trade limits. Yale tried setting hard limits. I'll only take 5 trades today, maximum. But limits created 2 problems. First, Yale would take 5 low-quality trades quickly, then miss good setups later. Second, Yale would break the limit anyway when urges became strong enough. Failed Solution 3: Time limits. Yale tried limiting his trading hours. I'll only trade from 9 to 11 a.m. But during those 2 hours, Yale would frantically overtrade to make the most of his limited time. Time limits compressed his overtrading rather than eliminating it. Failed Solution 4: Bigger position sizes. Yale thought maybe he overtrades because each trade doesn't feel significant enough. So he tried trading bigger positions with fewer trades. If each trade matters more, I won't need as many trades. This backfired dangerously. Yale still overtraded because the psychological need remained. But now his overtrading was with larger positions, creating bigger losses. Failed Solution 6: Switching markets. Yale thought he overtrades because his current markets offered too many apparent opportunities. So he switched markets, thinking fewer opportunities would mean less overtrading. But Yale found apparent opportunities in any market. He'd overtrade crypto just as much as Forex. The problem wasn't the market. The problem was Yale's brain seeking stimulus through trading. Failed Solution 7: Trading breaks. Yale tried taking full days off from trading. I'll trade Monday, Wednesday, Friday only. This worked on the off days. Yale didn't trade Tuesday and Thursday, but on trading days, his overtrading intensified because he was making up for the missed days. All these failed solutions taught Yale something important. You can't fix overtrading by trying to control trading behavior directly. The problem was deeper. The solution needed to address the underlying psychological drive.
The one trick that actually works. After 6 failed solutions and months of continuing overtrading, Yale discovered the one trick that finally stopped his overtrading completely. It wasn't what he expected. It was almost absurdly simple, but it worked. The trick is this: physical tokens. Here's how it works. Yale got 3 poker chips. Each morning, before trading, he'd place these 3 chips on his desk in front of his keyboard. Each chip represented one trade he was allowed to take that day. When Yale wanted to take a trade, he had to pick up one chip and place it in a bowl. Only then could he click the entry button. Once all 3 chips were in the bowl, Yale's trading day was over. No more chips meant no more trades. Period. This seems too simple to work, right? It's just chips. What stops Yale from getting more chips or ignoring the chips? Here's why this trick works when nothing else did. Reason 1: physical makes it real. Willpower is abstract. I'll only take 3 trades is abstract. But chips are physical. They're real objects you can see and touch. Your brain processes physical objects differently than abstract concepts. When Yale looked at his desk and saw only one chip left, he could see his remaining opportunity. It was concrete. This made the limit real in a way abstract promises never were. Reason 2. Forced prioritization. With limited chips, Yale had to choose which trades were worth a chip. Before, every trade seemed worth taking because there was no cost to taking another trade beyond the abstract cost of overtrading. But with chips, taking a mediocre trade meant Yale might not have a chip available for a perfect setup later. This forced him to evaluate, is this trade worth one of my only 3 chips? Usually, questionable trades weren't worth a chip. Yale would skip them, waiting for better setups. This naturally increased his trade quality. Reason 3. Tangible loss. Putting a chip in the bowl felt like losing something. Yale could see his opportunities decreasing. 3 chips became 2. 2 became 1. 1 became 0. This tangible loss created psychological weight that abstract limits never had. Yale's brain experienced giving up a chip as a real loss, making him more selective about when to trade. Reason 4. Simple visual feedback. Yale could glance at his desk and immediately see his status. 3 chips, full opportunity. 1 chip, getting low, be selective. 0 chips, done for the day. This visual feedback was instant and clear. No calculations, no remembering abstract limits. Just look at the desk and you know exactly where you are. Reason 5. Hard stop. Once the chips were gone, they were gone. Yale committed to not getting more chips during the trading day. This created a hard stop that his previous solutions lacked. With willpower, there's always just one more. With chips, 0 means 0. The physical absence of chips made continuing impossible in a way that willpower-based limits never achieved. Yale implemented the 3-chip system on a Monday morning. That day, he took exactly 3 trades. Tuesday, 3 trades. Wednesday, 3 trades. For the first time in months, Yale wasn't overtrading. By the end of the first week, Yale had taken 15 trades total. Before the chip system, he'd been taking 50 or more trades per week. The reduction was immediate and dramatic. But the quality improvement was even more impressive. Because Yale only had 3 chips per day, he waited for the best setups. He skipped questionable trades. He let marginal opportunities pass. Those 15 trades in the first week, 11 of them were winners. Yale's win rate jumped to 73% because he was only taking high-quality setups. His profit for that week was $2,800, more than he'd made in the previous 3 weeks combined.
Customizing the token system. Yale's success with 3 chips per day led him to refine the system and discover how to customize it for different trading styles and goals, making the physical token trick adaptable for any trader. Customization 1. Finding your optimal number. 3 chips worked for Yale's trading strategy, but your optimal number might be different. If your strategy is designed for 10 trades per week, you might use 2 chips per day. If your strategy is designed for 20 trades per week, you might use 4 chips per day. The key is setting the number based on your strategy's optimal frequency, not based on how many trades you currently take. If you're overtrading with 15 trades per day, but your strategy is designed for 5 trades per day, you use chips for 5, not 15. Customization 2. Different chips for different setups. Yale eventually refined his system with 2 types of chips. He had 3 white chips for normal setups and 1 gold chip for perfect setups only. The gold chip could only be used on trades that met all criteria perfectly. This ensured Yale saved capacity for his absolute best opportunities. The white chips were for good setups that met criteria but weren't perfect. Customization 3. Weekly chips instead of daily. Some traders found daily limits too restrictive. They'd have 3 high-quality setups on Monday, but none on Tuesday. So they used weekly chips instead. 15 chips per week used whenever valid setups appeared. This gave flexibility while still preventing overtrading. The weekly structure worked better for swing traders whose setups appeared less frequently. Customization 4. Chip recovery for perfect execution. Yale added a motivating twist. If he took a trade that met all criteria perfectly and managed it perfectly according to his plan, he could earn back half a chip. He used smaller colored chips for halves. This rewarded quality trading and perfect execution. It created a positive feedback loop where trading well earned more opportunity to trade. Customization 5. The penalty chip. Yale made it clear that rule breaking was not tolerated. If Yale broke his rules on a trade, entered without all criteria being met, moved his stop loss, sized incorrectly, he lost an extra chip as penalty. This penalty made rule breaking costly. If Yale had 3 chips but broke rules on his first trade, he'd lose 2 chips, one for taking the trade, one as penalty, leaving only 1 chip for the rest of the day. Customization 6. Time-locked chips. Some traders struggled with using all chips quickly, then sitting bored all day. So they implemented time locks. 3 chips, but 1 unlocks at 9 a.m., 1 at 12 p.m., 1 at 3 p.m. This distributed trading throughout the day and prevented burning through all opportunities in the first hour. The physical token system was flexible enough to accommodate different trading styles while maintaining its core benefit, making the limit tangible and real. The unexpected benefits. Yale's physical token system didn't just stop his overtrading, it created a cascade of positive changes in his trading psychology and life that went far beyond just reducing trade quantity. Benefit 1. Trading became enjoyable again. When Yale was overtrading, trading felt like an addiction. He hated it but couldn't stop. With the token system, trading became intentional and selective. Each trade mattered. Each trade was chosen carefully. This made trading engaging again instead of compulsive. Yale looked forward to trading sessions rather than dreading them while being unable to resist them. Benefit 2. Massive profit increase. In the 3 months before implementing tokens, Yale took 847 trades and lost $15,000. In the 3 months after implementing tokens, Yale took 187 trades and made $24,000. Same trading strategy, same markets, 1/5 the trades. But because those trades were high quality instead of impulse-driven, Yale's results completely transformed. Benefit 3. Time freedom. Yale used to spend 8 to 10 hours per day trading. With the token system limiting him to 3 trades per day, his active trading time dropped to 1 to 2 hours per day. The rest of his day was free. Yale could exercise, read, spend time with family, work on other projects. Trading stopped consuming his entire life. Benefit 5. Better sleep. When overtrading, Yale would stay up late taking more trades, checking markets constantly, unable to shut down. With tokens, once his 3 trades were done, his trading day was over. He could close his computer with no temptation to keep trading. Benefit 6. Confidence in self-control. Before tokens, Yale felt powerless against his overtrading urges. He'd promised to stop and fail repeatedly. This failure eroded his confidence in his ability to control himself. With tokens successfully stopping his overtrading, Yale's confidence in his self-control was restored. If he could stop overtrading with chips, what else could he control with the right system? Benefit 7. Strategy clarity. By taking only quality trades, Yale could finally see his strategy's true performance. Before, his results were muddied by hundreds of impulse trades. Now, with only strategic trades, Yale could evaluate his approach clearly and make genuine improvements.
Your path to stop overtrading. Yale's journey from 847 trades in 3 months to controlled, profitable trading offers you a simple, actionable solution you can implement today. Step 1. Count your trades. Go back through your last 30 days. Count exactly how many trades you took, not approximately, exactly. Write the number down. Most overtraders are shocked by this number. They guess they take 5 trades per day and discover they actually take 15. You need to know your real number. Step 2. Calculate your overtrading cost. Categorize your trades by quality. How many were perfect setups, good setups, questionable, garbage? Calculate the profit loss for each category. You'll likely find that your quality trades are profitable, but your overtrading impulse trades wipe out those profits. Seeing this clearly provides motivation. Step 3. Determine your optimal trade frequency. What does your trading strategy actually call for? How many trades per day or per week is optimal for your approach? This becomes your target number. If you don't know, a good starting point is 3 trades per day or 15 per week. You can adjust based on your specific strategy. Step 4. Get physical tokens. Go buy poker chips, small stones, coins, whatever works. Get enough for your daily limit. If you're doing 3 trades per day, get 3 tokens you'll use daily. The physical objects matter. Don't use an app or digital counter. The physicality is what makes this work. Step 5. Set up your system. Each morning before trading, place your tokens on your desk where you can see them clearly. Make a simple rule. 1 token for 1 trade. No token, no trade. Place a bowl or container next to your keyboard. When you take a trade, move 1 token to the bowl. When all tokens are in the bowl, you're done for the day. Step 6. Commit to the hard stop. This only works if you truly stop when tokens are gone. No borrowing tomorrow's tokens, no getting extra tokens. Once they're gone, your trading day ends. Period. This commitment is essential. Without it, tokens become meaningless. Step 7. Track your results. For the next 30 days, track how many trades you take using the token system. Track your win rate. Track your profits. Compare to the previous 30 days without tokens. You should see trade quantity drop dramatically while quality and profitability increase significantly. The bottom line. You keep overtrading not because you lack discipline, but because your brain believes more action equals more results and because trading provides stimulus that relieves the discomfort of waiting. These psychological drives make stopping overtrading through willpower nearly impossible. Yale took 847 trades in 3 months. 566 of them were overtrading impulse trades that lost him $30,100, completely wiping out the $15,100 his 281 quality trades made. His overtrading turned a profitable strategy into a losing one. But overtrading is fixable with the right approach, not through willpower or promises or abstract limits, through physical tokens that make limits real, tangible, and impossible to ignore. Yale's trading transformed from 847 trades losing $15,000 to 187 trades making $24,000 after implementing the 3-chip system. Same strategy, same markets, 1/5 the trades. But those trades were quality trades instead of impulse trades. The physical token system works because it addresses the psychology of overtrading rather than fighting it with willpower. Tokens make limits visible, force prioritization, create tangible loss, provide instant feedback, and create hard stops. You can implement this today. Count your trades, determine your optimal number, get physical tokens, set up the system, commit to the hard stop, track your results. Yale took 847 trades in 3 months before discovering this trick. You don't have to. You now know exactly why you overtrade and the one simple system that stops it. The question is, will you get the tokens? Will you set up the system? Will you commit to the hard stop? Your trading account, your time, and your mental health depend on your answer. Overtrading destroys all 3. The token system saves all 3. The choice is yours.